Thanks for joining Kevin and I for the market update for the month of July. David's taking a well-deserved vacation, so hope you're having fun, David. I thought we'd just update you on what the market did in July. It was great to see some positiveness in July. It was a fantastic July. The TSX was up 4.41%. The S&P 500 was up 9.11%, and the international market was up 4.98%. We continued to see the governments raise interest rates. The Bank of Canada raised their interest rates 1%, and the Fed raised their interest rates 0.75%. So both significant increases, and that again is to continue to fight the inflation problems that we're having. We definitely expect more rate hikes. We don't expect them to be quite as strong as that we've seen over the last two, but it's not going to surprise me to see next month another 0.5 point increase. I'm guessing at this point, but I think that we should probably see about 1% higher rates from where we are now by the end of the year. Kevin, what's the mood for investors and consumers right now?
Yeah, consumer confidence is still currently at multi-decade lows, even though we have strong wage growth and low unemployment. And investor sentiment is still multiple deviations into the bearish category. Now, historically, these tend to indicate a trend change for investment markets, similar to how excessive optimism coincides with market and economic peaks. So perhaps in that sense, even a leveling off of inflation could go farther than expected to easing investor concerns, leading to a reversal of market fortunes. Let's talk about bonds. Harry, what's been changing in the bond market?
Yeah, a lot's happening in the bonds. Obviously, we've had the first 6 months of the year where, Kevin, were the most challenging bond market I've ever seen. Definitely the bonds have started to, firm up now. And I'm actually really excited about the bond market. I think I mentioned this in the last market update. I haven't seen interest rates this high in 20 years. So we're getting significantly higher rates of return in the bonds and all our fixed income products. So this is going to bode extremely well moving forward in the future to get some fantastic bond rates. I mean, the yields on some of the basic bonds are at 5 and 6% now. And again, we haven't seen that for a long, long time. So I'm really excited about the bond market. Again, I definitely feel that the worst of that is over. Even though interest rates, we talked about, continually are still going up, the market's always pre-forecast that. So the market is always well ahead of where the economy is. For both stocks and bonds. So what we could see is actually a little bonus on that, because if we've already priced in 8 or 9 more interest rate hikes and we only get 4 or 5 interest rate hikes, we could see a little extra return on those bonds on top of the great rates of return that we're already getting.
Yeah. In the short term, market outlook is still a bit choppy, but we are starting to get excited about the recovery. As Harry mentioned, the investment markets tend to be 9 to 12 months ahead of the economy, so they're already planning for the recovery out. Now you can see on the chart on your screen, we have the S&P 500 dating back to 1962. You can see periods of market correction shown in red are typically followed by even longer periods of market growth shown in green. On average, they're about 80% longer. So you can see why we're excited. In the near term, investments could still lose value if stock prices drop. But remember, you don't actually lose any money unless you sell. By holding your investments for the long term, you will eventually see your portfolio bounce back when the markets inevitably recover. Now, the S&P 500 has faced many crashes and corrections over the decades, but as we just showed you in that chart, historically it has a 100% success rate when it comes to recovering from market slumps. Now, we do understand that in periods of market volatility and when economic outlook is all over the news and social media, it is completely normal to have questions. But that's exactly what we're here for. Anytime you need, Harry, David, or myself are happy to take your calls.
Kevin, that's awesome advice. I always love looking at the positive. I'm a real positive guy, and that's why I love the chart that Kevin put up there. The key is remembering, yes, Negative markets are normal, but look how normal the long positive markets are. So always try and focus on the positive. It makes you feel better. But as Kevin mentioned before, if you ever have questions, please call David, myself, or Kevin. We're always here to help you. Take care.
Have a good night.